Okay, everybody, here we go. It is me, Gregory Mannarino, Sunday, August 20th, 2023. This is my newest segment of Markets, a Look Ahead. All right, people, so much to talk about. There is a lot going on here. I want to put a few things together. I don't think it's going to surprise a single one of you who follow this blog, but maybe it will. And let's see where we are going with this. And I want to hear your perspective. So as you're listening to this video blog, consider what I am talking about, and I want to hear directly from you. I read the comments all the time. I will read yours. So please do comment on what I speak about right here. I want to cover a couple of dynamics that are converging on each other very rapidly and appear to be leading towards an inevitable conclusion, one that you and I have been watching unfold, kind of like a slow motion train wreck, which is accelerating for a while now. If you've been with me for any length of time, I have put a perspective on what's happening to you, to all of us here, especially if you're a member of the middle class for many, many years. I have said that there is a freight train coming straight at you. And what we need to do is try to sidestep it one way or the other. You have a target on your face. I've said, if you're a member of the middle class, you have a target tattooed on your face. You can't see it, but it is there. Now let's just talk about what we're allowed to know right out of the mouths of the mainstream propaganda ministry. Last week, we found out that every single leading economic indicator, without exception, everyone is pointing downward, meaning the economy is quickly decelerating. We already understand that the global economy is collapsing around us. That's a fact. People are getting choked to death, strangled to death by the Federal Reserve's own surveys. The Federal Reserve did a survey, came out last week. This survey confirmed that people have depleted their savings and they're now carrying their heaviest debt burdens in history. This is not a good recipe. So what do we got going on so far? Every single leading economic indicator. The only other time that we have been here before for this length of time was the collapse of Lehman Brothers, which led to the global financial crisis. So that should tell you something. Number two, with regard to the economy and a big tell as to where we are going. We're in an environment where the entire yield curve is inverted. It has been inverted for a very long time, and we've never been here before either. It's never been as inverted as it is now. Do your own research on this. Don't take my word for anything, especially what I'm going to tell you right now. Every single time, without one exception, that we've had a yield curve that resembles the one that we have now. Again, this is the worst we've ever seen. It has led to depressions, recessions, and whatever we're leading into now, something yet to be defined. So that's what's happening here with the economy. Every single leading economic indicator saying we got troubles here. The inverted yield curve, we got troubles here. The consumer is done, absolutely done. The other thing that we haven't seen, and this is market related, since the collapse of Lehman Brothers and the financial meltdown, is the 10-year yield where it is. You and I, if you follow this blog, I would imagine that you watch the Mannarino Market Risk Indicator, the MMRI, every freaking day. You and I have witnessed a phenomenon that we knew was going to happen because we have the MMRI. Free to you, free to me, free to everybody. Link in the description of this video. We crossed 250. We understand, look, every single time that we've crossed this 250 line as of late over the last quite a long time, the market gets all uppity, starts to sell off, and people get worried about where we're going to go here. Yes, we did cross MMRI 300 once, And if you recall, the market was very unhappy. What did they do? They floated out Nick the Pig. They floated out several Fed presidents to say, hey, don't worry about it. We got your back, the Federal Reserve. What happened? Bond yields plunged. The MMRI dropped to almost 200. And the market seems okay between 200 and almost 250. But we crossed that 250, and you have witnessed what has happened here. Risk in this market is at a near extreme level. 300 is extreme. We're at like we were hovering around 276 early last week. Then we saw the MMRI come down a little bit, but this market's been getting slammed, smacked across the face, backhanded across the face over and over and over again. Risk in this market is rattling the market quite obviously. What do we have going on? What's really happening here? Okay, we have a global bond market sell-off. Bonds are selling off, and they're selling off rapidly. You understand? I think you do. What else is going on? What did we find out recently? The U.S. dollar is being dumped by multiple nations around the world. Brazil, China, another big one. Saudi Arabia has lessened their exposure to the dollar by 41% in just the last 2 years. That's pretty extreme. So there's a dollar threat, which is, I think, very ominous, and this will lead to war, death, suffering on an unprecedented scale. We understand how this works. The Federal Reserve is not, mark my words here, and I think you would agree with me, is not going to give up the privilege, because it's a privilege to have the world reserve currency. Okay, what are central banks around the world doing? What do you and I know is clearly going on? Central banks are collectively in a race to the bottom, sucking the purchasing power out of their respective currencies here. Now we're going to see what happens here with the BRICS nations. This is going to be very interesting moving forward. Some kind of a fractionally gold reserve-backed currency, yes or no, we don't know yet. I guess we're going to see. But if this does happen, be careful what you wish for. That's all I have to say. Now, a couple of other things I wanted to talk to you about. Actually a lot of things, and I want to read something to you as well. You know what? Let's get to that first. I want to read something to you, and I want to ad-lib through this so we have a better perspective. Now, if you do subscribe to my free newsletter, link in description of this video, this lovely piece of work is already in your inbox. I want you to read this, and then I want you to please share it, get it out there. Let's start with the title here, okay? And I want you to ponder what I am speaking about here and give it some serious thought. Central banks are fostering an extinction level event. By yours truly. What is happening here? What has been happening to the middle class since like forever now? We're watching the middle class literally become extinct. Okay, it's evaporating. Pressure on the middle class has never been more extreme than it is now, and that pressure on the middle class, as you and I have spoken about for a decade, literally, is going to get monumentally worse. You know how many people, you can go back to my old videos, Greg, you're wrong. The middle class is the backbone. They need the middle class. Really? The middle class is being exterminated. So for all of you who called me out and said I was wrong, maybe you want to change your tune a little bit, just gauging from what you're seeing. So again, central banks are fostering an extinction level event. Pay attention. U.S. mortgage rates here in the United States have just risen to their highest level in 21 years. Meanwhile, despite all the talk about how raising rates would somehow tame inflation and that it was just temporary and even transitory, inflation continues to rise by their own numbers. Okay. Moreover, by the Fed's own admission, inflation, quote unquote, inflation continues to outpace every projection that the Federal Reserve has made. Do you think that you and I have known since day one that this would go on and on with no end to say? If we knew that, and the Federal Reserve is so big and lofty and they have their own economists, but we knew that this would continue and get worse, but they didn't know it, really? So every one of their projections had been wrong. Keep that in mind, except for yours and mine. We've been dead on. Do you think that's by accident? Moreover and overall, here's another phenomenon that you and I have been speaking about for a long time. Food inflation continues to outpace everything else, with energy inflation a close second. I mean, this is exactly what you and I have been outlining for I don't know how long, and here it is right in our freaking face. The fact is this, and you know this already if you follow this blog, but pay attention. The Federal Reserve, along with every other central bank, has absolutely no interest whatsoever to contain or stop inflation. Now, if you need to know one thing, can you read that? Any central bank's power resides in only one thing: its ability to inflate. That's it. You pull that away from a central bank, the central banking system starts to die. This is why there was all that uproar by Janet Yellen saying and other freaks paraded out on the main street. Oh, we got to raise that debt ceiling. We got to raise it. We have to borrow more. Yes, I will concede that if we had not done that, there would be a lot of economic pain, which we're going to face anyway to a much worse degree. But if in fact our politicians had the guts to say no more, we could have ended the central banking system. By now, the Federal Reserve would probably be almost gone. Central banks around the world would be collapsing. But no, we have to make sure our politicians are in the pockets of the central banks, and they are making sure that they foster more power or push more power to the top of the pyramid of central banks, who are the government. The rest of it is just a side act. Okay. It should now be clear to everyone as to the real reason why the Fed, along with the European Central Bank and the Bank of England, has been raising rates. These institutions are in the process of fostering a global middle-class extermination level event, effectively cutting off the availability of credit to small businesses and putting ever-increasing pressure on the already struggling middle class. Cutting off the availability of credit to small businesses fulfills the corporate agenda. They don't want any competition. They want small businesses gone. You understand? They don't even want to give up a single dime to a mom and pop shop. They want it all. You understand? So the corporate agenda is being fulfilled, stopping any competition. As for a middle class with depleted savings and extreme debt obligations, they become dependent on the system and are effectively pushed down to the lower rung of society. Does that sound familiar to you? Because that's the exact scenario that you and I have talked about from years ago. Well, it's in your face yet again. It's unbelievable. It really is unbelievable. Now, this central bank mechanism of creating a neo-feudal system is something we've never seen before. It's on an unprecedented scale. And make no mistake about it, this is deliberate and, of course, by design. Today, worldwide homelessness is at its highest level in history, a terrible trend which will get much worse moving forward. More slaves to the system, more dependency on the system. Does this sound about right to you? I'd be willing to say that you're nodding your head. Yes, Greg, it does. This trend will get much worse moving forward. Currently here in the United States, this is a staggering number. 69% of working families are living paycheck to paycheck, existing just one paycheck away from homelessness. I hope that's not you, although I believe it is probably some. By accident? A recent study by the Federal Reserve demonstrated that American citizens have now depleted their savings and are now carrying their largest debt burdens in history. Is that really by accident? You really believe? How many of you believe, with a show of hands, that this just happened? Really? Where is our loving, caring representatives in here? Why aren't they coming down on the Federal Reserve? Who's responsible for the economy? Who's responsible for the financial markets? Who's responsible for the financial system? Is it our loving, caring representatives or the President of the United States? Is it kings, queens, monarchs, or dictators? How about no, it is not. Zero. It is the central banks. So this is not by accident. Now, listen to this part, okay? Effective March 15th, 2020, this is an ominous day in history, the Federal Reserve reduced the reserve requirement for depository institutions. It sounds like a fancy word. Depository institutions are banks. Reduced the requirement reserve requirement for depository institutions, banks, to zero. Having a zero reserve requirement has allowed the overall money supply to hyperballoon. Economics 101, dictates that an inflating money supply itself is massively inflationary. Why don't you hear about that on the mainstream? I can only give you one guess, and you better get it right. If the Fed was serious about containing inflation, and you know this, but pay attention a little bit, all they would have to do is raise the now zero reserve requirement back to a fractional reserve system, which is what we had for decades. We don't even have that anymore, and inflation would actually reverse. No, because the central bank's power resides in one thing, its ability to inflate. People, you know this. Looking ahead. The mechanism outlined right here has a slip knot around the necks of all of us here, which is getting tighter. This is fostering a quickly vanishing middle class on a global level. Make no mistake, this is an extermination. I would find it very hard to believe, honestly, that there is a single one of you that would disagree with this. I think this is an important piece of work. And again, this is in your inbox if you do subscribe to my free newsletter, link below. Make a copy for yourself, burn it off, share this stuff, get it out there. People are being led to the slaughter on a scale that we've never witnessed in history, okay? But again, all by design, you know that. Now going back to this market, risk in this market is near an extreme level. It's a perfect storm. The economy is in a perfect storm. The markets are in a perfect storm, and they are converging together. Okay, they are converging. Two perfect storms converging. They're going to hit and explode. That's the pathway we are on now. With regard to this market, we are clearly at an inflection point. And I've been telling you for a while, without direct intervention here by the Federal Reserve to suppress rates or weaken the dollar or effectively get in here and buy the stock market. That's what the Fed does. They have a trading desk. It's called the Plunge Protection Team. Look it up for yourself. It's not some kind of conspiracy. It's a real thing. So the Fed has three options, or a combination of those three to prop up this market. Or are they going to let this melt down? If they don't do something, you can see the trajectory of this market. The market just flashed a sell signal, and I did a whole video about it. Just look at the videos I did last week. Look at the title. Stock market just flashed a sell signal, and since that time, this market has cratered. Okay, it's interesting that we're not even getting a bounce here. Generally, nothing goes down or up without a little corrective phase. We've seen this market pretty much go straight up for quite a long time, and maybe this is overdue. But this is not just a normal correction or a normal pullback. We have risk rising at a very rapid pace. My advice is, if you're long this market, sit tight. Don't do anything. Don't add to those positions. It may not be the right time to buy the dips here. If you're a trader in this market, or a swing trader, intraday trader, this is the stuff that you dream about. This is what you want. You want to see this kind of movement here. So, I mean, look, there's always something for everybody in any kind of a situation like this. I think it's pretty evident. All right, people, look, you know what to do. You're not going to stop betting against the debt, becoming your own central bank, hoarding hard assets, physical silver, my favorite of all time. With regard to cryptocurrencies, I think there's a major opportunity here to buy more. For those of us that are in that space, I understand it's not for everyone, and that's fine, okay? You know, some people like chocolate ice cream, some people like vanilla. It's just the way it is. You know, it's not for everyone. I understand that it is a very volatile space. Trust me on this. I'm talking about the crypto space, and you got to have the understanding of where this is likely to go. Again, meltdown in the debt market, which we're seeing, which means a global debt market sell-off, which is happening right now. Cash is now bleeding out of the debt market, and it's bleeding out of the stock market. Right now, cash seems to be bleeding out of everything except for crude oil, going back over there. Generally, in a meltdown situation, and we really could be here now, the market throws everything out, throws the baby out with the bath water. So we may actually be, it's possible right now. If the Fed doesn't take actions, this could be the beginning of something much, much worse. Again, we have a convergence here. Two perfect storms, the economy and the market converging together. And this can lead to a serious problem moving forward. People, I covered so much with you today. I hope you pondered the things that I've spoken about as I'm speaking about them. There's a lot of stuff here. There's nothing wrong with watching this video twice, listening to the concepts I've spoken about here. Does it make sense to you? I want to hear a couple of things, honestly. Is Greg out of his freaking mind? Yes or no? Do you see the same things I'm seeing? Are you feeling it in your bones? What is your intuition telling you? The stuff that I've covered here by their own numbers, their own admissions. Do you see it? It's in our face, every single one of us. You understand? Anyway, like I said, please ponder these things. Comment on these things. I will read the comments, I promise. Okay? With that said, I'll see all of you tomorrow for my morning pre-market report. And I'll check back later again to read these comments. People, if you got anything out of this video, please give it a thumbs up. These are so valuable. Please share the video. Get it out there. I think we're making a difference in the world. We're getting through to people. They need to hear these things. Where do you think they're going to hear these kinds of concepts? Really? The mainstream media? They're going to let you know this kind of stuff? You know. This is stuff you're never going to find anywhere. You gotta be an out-of-the-box thinker to understand what's happening. And I know every single one of you that got through this video that's here right now gets it. And we're going to get through this together as we always do. I really feel like we're invincible because, number one, we got each other's backs. Number two, we're staying aware. We're raising our awareness. We're understanding what's going on around us. And it's only going to get worse because that's what it's designed to do. You understand? All right. Love you all from the heart. Enjoy the rest of your day. All right. I'll see you.